Have you ever wondered how the wealthiest people built their fortunes? Many have amassed their wealth through a time-honored method, real estate investing. It's no secret that property investments have been a reliable cornerstone in the portfolios of some of the world's most affluent individuals. From high-rise apartments to sprawling estates, real estate has been a key player in the game of wealth accumulation. Today, we are going to delve into the world of real estate investing and examine its pros and cons. Real estate investment isn't just about buying a house and waiting for its value to increase. No, my friends, it's a far more expansive field than that. Let's roll up our sleeves and delve into the various types of real estate investments. First up, we have rental properties. This is the classic method, the old faithful of real estate investment. When we say rental properties, we're talking about residential real estate that you, as an investor, buy and then rent out to tenants. It's a bit like being a landlord, only with more financial acumen required. These properties can range from single-family homes to multi-unit apartments. The income is generated from the rent you collect, which ideally should exceed your expenses. Next, we have real estate investment trusts, or REITs as they're more commonly known. These are companies that own, operate, or finance income-generating real estate. Think of it as buying stocks in a company, but instead of a tech startup, it's a shopping mall or a block of flats. The beauty of REITs is that they offer a way to invest in real estate without having to physically own a property. Then there are real estate mutual funds. These are investment vehicles that pool together money from various investors to buy securities of companies involved in real estate, such as REITs. It's a way to spread your risk and potentially increase your returns. Think of it as investing in a buffet of real estate options, rather than just one dish. Lastly, we have commercial real estate. This includes everything from office buildings to retail malls, industrial properties to hotels. Commercial real estate can be a lucrative investment, but it often requires a significant amount of capital and expertise. As you can see, there's a variety of ways to invest in real estate. Each has its own set of advantages and disadvantages. So whether you're a hands-on landlord type or more of a sit-back-and-watch-the-returns-roll-in investor, there's a real estate investment strategy for you. Now, let's discuss the sunny side of real estate investing. One of the most appealing aspects of property investment is the potential for cash flow. This is the net income from a property after mortgage payments and operating expenses have been made. A key advantage of real estate investing is its ability to generate cash flow. For many investors, it's like having a constant stream of income that continues to flow even when you're sleeping. It's like a well-behaved goose laying golden eggs without the squawking. Next, let's talk about appreciation. Over time, the value of real estate has a tendency to rise, or appreciate. This can result in a substantial return on investment as properties sell for more than they cost. Think of it as your property doing the hard work while you sit back and enjoy your cup of tea. Now, who doesn't love tax benefits? With real estate investing, you'll enjoy a plethora of these. These can range from deductions for mortgage interest and property taxes to benefits from depreciation and like-kind exchanges. It's like having your cake, eating it, and then getting a tax deduction for it. Finally, diversification. Real estate investing provides an excellent opportunity to diversify your investment portfolio. By investing in different types of properties and in different areas, you can spread risk across various markets. It's like not putting all your eggs in one basket. Unless that basket is a large, well-diversified real estate portfolio, of course. So, to recap, real estate investing offers the potential for cash flow, appreciation, tax benefits, and diversification. Like a well-tailored suit, it provides a perfect fit for investors looking for a mix of income, growth, and let's face it, a bit of glamour. Clearly, the benefits can be quite attractive, but as with any investment, there are also risks. It's not always smooth sailing in the world of real estate investing. Indeed, just as there's no such thing as a free lunch, there's no investment without risk, and real estate is no exception. One of the most glaring challenges is the need for significant capital. Buying property isn't like buying a bag of crisps. It requires a substantial amount of upfront cash. For instance, imagine you've set your sights on a lovely two-bedroom house on the outskirts of town, priced at a cool $500,000. Even with a 20% down payment, you'd still need to cough up a hefty $100,000. And that's not even factoring in closing costs, renovation expenses, or ongoing maintenance. Speaking of maintenance, let's talk about the potential for property damage. Whether it's a leaky roof or a tenant who's taken up indoor skateboarding, property damage is a very real risk. And it's not just physical damage you need to worry about. There's also the risk of depreciation due to changes in the neighborhood or market conditions. Then there's the potential for vacancy loss. It's like throwing a party and no one showing up. Only in this case, the party is your property and the guests are tenants. If no one rents your property, you have what we call a vacancy. And every day that property sits empty, it's not generating any income. It's essentially a fancy paperweight. Lastly, there's the issue of illiquidity. Real estate is not a liquid asset, meaning it can't be quickly converted into cash. If you find yourself in a financial pinch and need to sell, it could take months, even years, to find a buyer at a reasonable price. So, while real estate investing can offer attractive returns, it's not without its pitfalls. You have to contend with the need for significant capital, the risk of property damage and depreciation, potential for vacancy loss, and the illiquid nature of the asset. As you can see, real estate investing isn't without its downsides. It's important to weigh these against the potential rewards. So, is real estate investing the golden ticket to wealth? Well, my dear listeners, as we've seen today, the answer to that question isn't a simple yes or no. It's a bit more like a well, it depends. Let's take a moment to reflect on our journey through the maze of real estate investing. We kicked off by unveiling the different types of real estate investments. We discussed rental properties and how they can provide a steady income stream. We also talked about real estate investment trusts, or REITs, which offer a way to invest in real estate without the need to own, operate, or finance properties. Next, we plunged into the sea of benefits that real estate investing can offer. From potential high returns and cash flow to tax advantages and diversification, the pros of real estate investing can indeed be tantalizing. But then we turned the coin around and looked at the other side, the cons. We talked about the risks, the requirement for a significant capital outlay, the potential for property damage, and the fact that real estate is not a liquid asset. Our journey through the pros and cons of real estate investing has shown us that it's not a one-size-fits-all kind of deal. It requires thorough research, careful consideration, and a good understanding of the market. But don't let that deter you. The world of real estate investing is vast and varied, and there's a place for everyone, from the novice to the seasoned investor. It's about finding the right fit for you, your financial goals, and your risk tolerance. And remember, as enticing as the potential rewards of real estate investing can be, it's important to maintain a well-diversified portfolio. Don't put all your eggs in the real estate basket. Diversification is the key to mitigating risk and ensuring you have a balanced investment portfolio. Remember, the key to successful investing is knowledge, patience, and a well-diversified portfolio. With these in hand, you're well on your way to building your own fortune.